Today in this video, I want to share with you this amazing scalping trading strategy that has the potential to literally make you a lot of profits, but you have to make sure to follow the rules that I'm going to mention in this video. And also the best thing about this strategy is all the indicators used in this strategy are free. So without any further ado, let's get started. So first of all, let's go ahead and add the indicators that we're going to need for this strategy. And for that, let's go towards the indicator tab. And here we're going to search for Heiken Ashi RSI. And we're going to add this one by Jair Orders to the chart. Now, once the indicator is added, we can see that the indicator is plotting these Heiken Ashi candles along with these regions that we can see on the chart. Now, let's see how this indicator works. This indicator consists of the Heiken Ashi candles and the RSI. And the advantage of using the Heiken Ashi candles is that they remove the cluster from the chart so that we'll be able to see the trend very clearly. Now let's go towards the indicator settings, and inside the settings we can see that there is the length and open smoothing value. We can change the length from, let's say, 14 to 30, and we'll notice that the candles become less sensitive to the price in the market. And for our case, we're going to change the length from 14 to 10, and here we can see this is the open smoothing value. We can change this to 5 for our trading strategy, and there are a bunch of other settings as well. For example, you can show the stochastic RSI as well, or you can also change the overbought and oversold conditions. But for our case, we're going to keep these settings the same, and we're going to go to the styles tab, and here we're going to uncheck the RSI and everything related to RSI shadow, RSI overlay, and stochastic indicator, and we're going to remove everything from here. And now we're going to hit OK, and here we can see that now we can see much more clear RSI candles in the form of Heiken Ashi. Now let's go ahead and talk about how this indicator works. This indicator consists of 3 regions. The first one is that this overbought and oversold condition. For example, whenever the RSI candles reach this red area here, the market is considered to be overbought and the market is likely to get reversed, or there should be a pause in the upward trend. And whenever the market reaches this green area here, then market is considered to be oversold and there should be a pause in the downward direction or bearish trend. And we can also look for any reversal that might indicate that market is going to reverse from bearish to bullish direction. So for example, here we can see that the market reaches this oversold region, and here we can see the candles after touching this oversold region, the price moves in the upward direction, so there is a change in trend. And whenever the Heiken Ashi RSI candles cross above this zero line, that would mean that the buyers are gaining momentum. And similarly, if the Heiken Ashi RSI candles go below this zero line, then that would mean that the sellers are gaining momentum in the market. Now we can make multiple trading strategies for this indicator, but the one that we're going to use is going to be looking for the entries based on the Heiken Ashi RSI candles when they reach the overbought and oversold regions. Also, there are extreme overbought and extreme oversold region. For example, here you can see that whenever this candle crosses this 30 level, then the market is considered to be extremely overbought, and whenever the candles cross below this minus 30 level, then the market is considered to be extreme oversold and there should be a pause in the downward trend or a reversal in the upward direction. Now let's go ahead and add the other indicators that we're going to need for our trading strategy, and for that, let's go towards the indicator tab, and here we're going to search for Exponential Moving Average or EMA, and we're going to add this one by TradingView to the chart. And the second indicator that we're going to use in this strategy is the volume indicator. So we're going to search for volume, and we're going to add this one by the TradingView to the chart. Now we can see that both these indicators are plotting on the data onto a chart, and we can go to the settings of this EMA indicator, and we're going to change the length from this 9 to 200. So we'll be using the longer period exponential moving average to find the trends in the market, and we can change the color and the thickness of this line so that it will be easier for us to see. And now let's go towards the settings of this volume indicator, and inside here we're going to change this moving average length from 20 to 30, and also we're going to go towards the style and turn on this volume line, and we can change its color to white and also increase its thickness so that we can see it a little bit better. Now we can go ahead and start looking for our long and short entries, and the rules for taking long and short positions are as follows. So the rules for taking short positions are as follows. First of all, the price action must be happening below this 200 period exponential moving average. That would mean that the market is in the bearish momentum. And the second thing that we need to check is there is enough sellers volume. So if the candle is red and it's crossing above the 30 moving average, then that would mean that there is enough sellers volume. And the final condition that we need to check is the RSI candles must cross either this overbought or extreme overbought level. As we can see here, the RSI candles have crossed both these levels, so all our three conditions are fulfilled, and we can go ahead and take our short position at the close of this candle here, and we can put our stop loss above this 200 period exponential moving average. And for our case, we'll be taking the 1.5 restore ratio trade, so we can go ahead and far play the market and see how this trade goes. And as you can see, our trade take profit level has been hit, and for proper risk management, I would advise you to only risk 2% of your trading account. And the rules for taking long positions are as follows. First of all, the price action must be happening above this 200 period EMA line, which means that market is in overall bullish trend. And the second thing that we need to check is there is enough buyer's volume, and whenever the volume candle crosses above this 30 period moving average, that would mean that there is enough buyer volume here. And the final condition that we need to check is that RSI candles must go below this oversold or extreme oversold region, and all our conditions are being satisfied in this case. So we can go ahead and take a long position at the close of this candle here, and we can put our stop loss below this exponential moving average line, and we can target again 1.5 restore ratio. So let me just go ahead and set our take profit level, and if we forward play the market, let me just go ahead and forward play it. So here we can see that our take profit level has been hit, and again, for proper risk management, I would advise you to only risk 2% of your trading account. That would allow you to take a lot of trades and also not blow up your trading account in a single trade. So I hope you are able to understand how this amazing scalping trading strategy works. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video.